The average homeowner's net worth is 40 times greater than the average renter's net worth. That's according to a study by the Federal Reserve from 2020. So if you know somebody who is ready to build their financial stability and generational wealth, I would love to talk to them. Buying a house is a lot more than just finding a house and putting a contract in. There are a lot of steps along the way. First of all, you want to get pre-approved, especially in this market. A seller is not going to even entertain your offer if you don't have a pre-approval letter. Once we've nailed down your wants and your needs and we find the right house, the next step is to put the offer in, and then I will work with you to negotiate the sales price, the terms, the closing date, all those fine details. After the contract has been accepted, then we start doing our due diligence. So that includes a home inspection, because even in new construction, you want to make sure that you understand what is going on in the house. Not necessarily because there will be any deal breakers, but you'll find out information that will help you also then prioritize maintenance issues. Part of the inspection process will be getting a 4-point inspection done. That's going to look at your roof, your AC, your plumbing, and your electric. Those are the 4 items that a homeowner's insurance company is going to look at when they're determining if they want to put the risk into providing homeowner's insurance for you. And that is also a required part of getting your mortgage. Once we get through the inspection period, which can involve negotiation, if let's say the 4-point comes back and the roof doesn't pass, or we find out that there are some, minor but numerous issues within the home inspection, we can negotiate to have those repairs done by the seller, or we can negotiate credit at closing, depending on what the issue is. Also during the due diligence, that's the time when you find out what's the cost going to be for your homeowner's insurance, confirming you're in the school district you think you're in, property lines are where they are, all of those kinds of things. Once we get through that period, the next step is getting the appraisal done. That is something that your lender will coordinate, and a bank is going to require an appraisal to make sure that the loan that you're requesting is the amount appropriate for the value of the house. Once we get through that appraisal process, then the next step is clear to close. So that's where you're going to provide all of those last minute questions and answers from underwriting, updated W-2 or updated pay stubs, and answer any miscellaneous questions about deposits, things like that. It happens in almost every situation. It's just your mortgage company crossing their T's and dotting their I's, nothing to be worried about. And then we get to the big day, closing. And that's when everything is finalized. You will sign papers for 45 minutes, and then the title company will send everything in and get it finalized. And that day you should have your keys and be ready to move in. Absolutely, you need to get pre-approved. A pre-approval is going to do a few things. It's going to make sure that you are shopping within your budget, not only the total value of the purchase price, but also the monthly payment that you're going to be comfortable with. It's also going to show a seller that you are a serious buyer who is committed to the process, that you're prepared to close on that property. In this market, a seller's not even going to look at your offer if you're not pre-approved. If you need help finding a lender, I have the best lenders, so I'd love to introduce you. So it used to be that you had to have 20% down in order to even be considered for a mortgage, and that is not the case anymore, thankfully, because I don't know a whole lot of people who have 20% down these days. 20% is the standard to save you from having to get private mortgage insurance. So it is great if you can have 20%, but it's certainly not necessary. An FHA loan is only going to require 3.5% down. Most conventional loans only require 3% down. And then you've got a lot of opportunities like VA loans or USDA loans that actually have a 0% down payment requirement. So closing costs are going to depend on a lot of different factors, and including where we are in the month or the year. So your closing costs are going to include title insurance and also prepaids like your taxes and your homeowner's insurance. Generally, we recommend having 3 to 6% set aside for your closing costs. Some of those can also be rolled into your mortgage. Once we go under contract as the buyer, we're going to order some inspections. One of those is the home inspection, and this home inspector is going to look at every single little thing in the house. They're going to provide usually a very overwhelming report, and you're going to have a moment probably where you think, oh my goodness, I'm making a huge mistake. You're not. That's the home inspector's job. It's their job to tell you everything that they think should be repaired or replaced so that you are making a completely informed decision. I like to think of it as knowing where your maintenance priorities should be in the future. A 4-point inspection is only going to focus on 4 major items. That is your roof, your AC, your electric, and your plumbing. So a homeowner's insurance company is going to require that cleared 4-point in order to provide homeowner's insurance. They're going to make sure that there are no leaks or structural damage in the roof. 4-point inspection, these days a homeowner's insurance company wants to know that your roof has 4 more years at least to that roof life if they're going to insure it. They want to know that the AC is in working order and that there's a good amount of life expected in that AC unit as well. Interesting fact, in Florida, you actually are not required to have air conditioning in a house, but you are required to have heat. I always think that's pretty hilarious. But an insurance company is going to want to make sure that if you have AC, it is in good working order. And then plumbing and electric, they want to make sure that it is consistent with the codes at the time the house was built. But then there are some upgrades that need to be made throughout as well. They want to make sure that you don't have any cast iron plumbing. They want to make sure that you don't have any cloth wiring for the electric. There are certain electrical panels that are completely outlawed, so you want to make sure that you're not going to have a fire hazard with your electrical box. So a lot of people think that the only thing that they really need a realtor for is to unlock the properties that they want to see. That is probably the least significant part of being a real estate agent. It's my job to make sure that my clients understand all of the complexities that go into buying a house. So it's the house itself, it's the neighborhood, it's understanding the inspection reports. How are their taxes going to change when they buy the house? What financing mechanisms are there? And then how to really make sure that they are positioning themselves to start in a positive equity fashion. Another problem with an agent who doesn't negotiate well is that you may end up paying for repairs that you could have gotten the seller to pay for you. On the seller side, you want to have a real estate agent who's a good negotiator so that you make sure that the offer you accept is the offer that closes. If there are problems that come up during the inspections, you want a real estate agent who's going to really help you stick to that price and not have to give away a lot in seller concessions. So I actually get this question a lot. Do I have to pay off my house before I buy my next house? There is a thought out there that, well, I have to really make sure I get the house that I'm going to be able to live in for a long time because I'm going to have a mortgage for a long time. But the answer to that obviously is no. All you're going to do when you sell your current house is the proceeds are going to be paid off to the mortgage company directly through the title company. So you are not stuck in that house.